Για να δω. Hello everyone. Welcome to the Nicosia Bitcoin Meet Up. This is a community meetup that has been running for 5 years. Today we have re-invited Kyriakos. I need to move out of this light. We've re-invited Kyriakos to tell us about taxation of Bitcoin and crypto in Cyprus. So this will be mostly a discussion.
Yes.
Can we maybe try and see if you can hear us without this? Can we do this without a microphone?
1, 2, 1, 2, 1, 2.
No.
Maybe it's better with
Yeah, so, all right, yeah, we will use this. Probably you will hold on to it and I'll shout because you only have one. So, is your equipment ready?
Yes, we're ready.
Okay, so, all right. So this is a topic that interests a lot of people. A lot of people have bought Bitcoin and crypto in Cyprus, and the time comes to perhaps liquidate a little bit, or maybe they want to buy a house, or they want to buy a car, or they're trading. And this is perhaps the number one question we have online on what's the taxation of the taxation treatment of this in Cyprus. So, Kyriakos, maybe you can just give a short intro.
Yes, of course. Hi everyone. This is Kyriakos Tramountanellis. I'm the owner of Cyprus Audit Services with offices in Nicosia and in the UAE, in Dubai. And we've been dealing with crypto traders and crypto investors for more than 4 or 5 years now. So we're going to talk today with regards to the taxation of the cryptos, and instead of providing you with a presentation, which would be a bit more boring, and since we've covered everything in our last meetup, this session will be more focused on FAQs and of course to resolve all of your questions. So shall I start?
Yeah, perhaps I can say that there is no mention of Bitcoin or crypto in the law.
Yes.
In the taxation law specifically, there is no mention of it at all. And if you follow the online discussions, many people interpreted that as, well, it means it's free. But that's not actually the case. So maybe you're gonna tell us about this.
I will have a small intro to brief you about how the Cyprus Income Tax Office views crypto traders, how it taxes them, and we will go into the more details. So, trading of cryptos is taxable in Cyprus. What do we mean by trading of cryptos? Because this is the gist of the matter. If you're someone who is buying cryptos, converting one coin to the other, you are a frequent use of exchanges and so on, as far as the Cyprus Income Tax Office is concerned, you are considered to be a trader. And as a trader, you will be taxed. In Cyprus, as Dimitris mentioned correctly, there is no distinction or a special legislation covering the crypto per se. So when you are a trader of cryptos, it's the same as you were a trader of any other commodity or a provider of services. We will go into the details a bit further in a bit, but it's very important for you to understand that the myths like cryptos are tax-free or I'm not converting my coins or my Bitcoin into fiat, you know, and when I will do it once, I will get away with it because I've done it only once. This no longer stands. We have received many tax rulings for many of our clients, whether these are individuals or corporates or investment firms dealing with this. And the answer is uniformly the same from the Cyprus Income Tax Office. You will be taxed like any other trade. So this is very important for you. If you're individuals who are holding your cryptos, and now that Bitcoin skyrocketed and you want to cash in, let's say, because you haven't done the whole setup via company, you will be taxed at the highest rate. Scaled, of course, 0%, 20, 25, 30, but because we're talking about big profits, you will be reaching the 35%. Some of our clients and the more sophisticated traders who have consulted advisors have set up corporations, companies, Cyprus companies, and when they will sell their cryptos, in that instance, they will be taxed at the corporate rate, which is 12.5% at present. Dividend tax, once they want to take the money out from their companies, will be taxed at the current enforceable tax rate. At present, it's 17% for Cypriots and Cyprus tax residents and Cypriot domiciled people. Lots of our clients and lots of sophisticated traders and investors who are not Cypriots, or even who are Cypriots but they haven't been living in Cyprus for more than 18 years or 20, they take advantage of the non-dom tax status, and this is important for you to know that it applies only to people that they have not been living in Cyprus for a long period. So mainly these are internationals who want to come and relocate here. We get this in writing from the income tax office, and they are exempted from any dividend tax. So these sophisticated traders and investors, they get away with it. They can bank millions and pay only 12.5% on the profits, excluding company expenses, which are of course relevant to the operations of the company if this is an investment company and for the trading of these securities.
Kyriakos, many people are not aware of what a tax ruling is. Could you explain?
Yes. A tax ruling is the direct answer by the Cyprus Income Tax Office to the applicant, answering their specific questions about specific activities. In our case, the tax rulings are, of course, how are coins taxed once they are converted into fiat, how Bitcoin is taxed, or if I have exchanged my Bitcoin for a house, or if I'm using an exchange card to live and sustain my family, will I be taxed? Is this considered taxable? So these are the most common questions we ask in tax rulings. The procedure is, of course, we as tax consultants, we sit with the client, they explain us their circumstances, we write in a specific manner covering specific areas to the income tax office, and the income tax office replies back to us with an answer based on the facts given. And this answer is addressed to the applicant. So we cannot get a tax ruling vaguely. We need to use the applicant's tax number, company number, and the facts, because the tax ruling is binding based on the information you ask the tax office. So if you use misleading information, you will get a different answer which won't cover you, when you are investigated or when your tax return needs to be cleared.
So these tax rulings are private, but because often the tax rulings are submitted by tax advisors and accountants, that's how we have learned these things, because there is nothing in the law and there was some ambiguity, but all these responses that were private informed the situation basically. So now the tax advisors and accountants know how to deal with this. You did mention that it's more favorable to, if you want to trade, to use a limited company in Cyprus. The question is, there'll be a lot of people in the audience who already have crypto from years ago, and is there anything they could do? They bought it as individuals. Is there anything they could do? Could they use a company somehow to get less than 30% tax?
This is a very good question for everyone. We're talking about Cyprus now. You're Cypriots or you're not, you're internationals who are living in Cyprus. And we assume that you want to move your positions into a corporate, a limited company to take advantage of the 12.5%. Unfortunately, the minute you will dispose your portfolio and move them to a legal vehicle, such as a company, that is still considered a tax point for you as an individual. So, strictly speaking, you will have to pay personal income tax, and then when the company sells that position, maybe in 5 years' time, it will be taxed at 12.5%, but the profit will be calculated on the value at the time that it was transferred to the company. It left the individual and it was acquired by the company. But unfortunately, you will be taxed at an individual rate once you transfer everything, and then when you sell everything by the company at 12.5%.
Okay.
There are ways around it. Of course, you can, but this is more of a tax planning. There are ways around it if you are willing, for instance, to relocate to a country which is friendly with cryptos. This is a common thing that our clients do. But of course, you cannot do such stuff just to avoid tax, because you could be captured, less likely from the Cyprus Income Tax Office, but more likely from more advanced taxation departments and jurisdictions like the UK, Germany, and more advanced economies that they are very thorough in examining their former taxpayers. So if you know anyone who could be of interest to do something like that, we have an office in Dubai, we can assist, but it's always tricky because you have tax evasion and tax planning. So it requires proper steps to be taken into consideration.
In the community, we also have people who are paid in crypto for their jobs, or maybe they are offering some service and they are paid in crypto, and sometimes they keep it, or sometimes they have to liquidate it immediately to pay their expenses. And a common question is, how are they taxed, or what steps should they take? For example, what happens if they liquidate it immediately, so there is no capital gains?
When any one of you is sustaining themselves with cryptos, that means that you're converting them from the space, from the cryptocurrencies into fiat, into real money. Whether this is cash, a car, whatever, payment of a house, of rent. That means that, strictly speaking, you need to be declaring this amount of money as if it's your own personal income, and you should be declaring it in your personal tax returns, so that everything is transparent. You pay your taxes, and you won't get any surprises in the future. It's important to note that the Cyprus Income Tax Office can go back up to 7 years without court decision, and up to 12 years, if I'm not wrong, I think it's 12, with a court decision. So to feel really comfortable that whatever you did in the past will go unpunished, let's say, or under the radar of the Cyprus Income Tax Office, more than 12 years need to lapse.
So actually, let's expand on this a little bit, because on the online forums, you see that there's people who either have bought cars and houses, or they plan to, and they hope that perhaps they will not declare the profits. But there is a risk, as you said. You want to expand on that?
Yes. When individuals or businessmen deal with such transactions and they omit to declare anything, there is of course a risk because it's a matter of whether or not the income tax office has the resources to pick on you and of course tax you. Many cases we have competitors who are calling and informing the income tax office of their competition. If you have a dispute with a girlfriend, if you get divorced, this is very common. I used to be a student actually in London, and they were giving this as an example in the UK that we had a class, and we had an HMRC investigator talking to us when we were doing the chartered accountant, and they were saying that we love our easiest job is when a girlfriend or a former wife calls us and talks about her husband or her boyfriend. Because once you do all this, you cannot hide it. Once you have the house, you cannot hide it. So if someone calls the income tax office for whichever reason, or if the income tax office picks you because you are a director or a main player in the economy or a popular figure, and they say, let's check this person, they will ask for a capital statement. A capital statement is effectively the tax investigation performed in all countries. In Cyprus, we call it capital statement. So they will ask you, show me your wealth today or at the year end 2024, and go 7 years back or 5 years back, show me your wealth then, and explain to me how your wealth increased. And it's a criminal offense if you present falsified information. All this needs to be prepared by an audit and assurance firm like ourselves, because it's a thick paper of evidence. And it captures everything. It's important to mention this. If you are a family of 4, in that statement you need to show how you sustain your family. If you have if you have children that go to private schools, if you own an expensive car, if in the land registry we can pick up 4 houses which you didn't have, everything is recorded. And at the end of this 5 or 7 year period, we always come up with a whole. And that whole is the hundreds of thousands that cannot be justified based on the declaration of your salary or other income in your annual tax returns. And of course, we submit this report and the income tax office does its work. It starts taxing you. So many people get away with it. It's up to your risk appetite, of course. It depends, of course, on the amount of money we're talking about. But the law requires you to declare everything in your tax return. And this is the answer to that question.
Another common question is what happens if you spend your Bitcoin, let's say, without converting it to anything? Or perhaps you don't convert it to euros, but you convert it to a stable coin. Perhaps we can talk about what's the difference between you spend your Bitcoin here, maybe you buy a coffee, or you spend your Bitcoin and you buy a €500,000 house. Can you perhaps talk about the different scenarios?
Again, we are separating realized transactions. These are transactions that are converted into fiat or into something digital, or into something tangible outside the crypto space. So if you have coins and you're converting them to other coins, or you have cryptos and you're converting them to Bitcoins, Ethereum, or if you're mining them, but everything is in the crypto space, these are unrealized transactions and they are not taxable. So this is very important. Now, whether you buy coffee every day from your exchange with your exchange card, or you bought a house once, this is realized transaction. This is a realized transaction, and strictly speaking, you should declare it and pay tax on it. So
that's actually very important. You said that if you are converting between digital assets, then that's the tax authority doesn't care about that. But what if you are trading and you're earning? So through the trading, you earned a lot of money, but you haven't converted it to anything yet. Do you still need to declare these profits, even though they are digital?
Very good question. Based on my understanding, you do not need to declare them because it's in the crypto space, and at present, the income tax office cannot even, they don't even know how to calculate all this, never mind tax them. But the tax rulings we get, they're clear. All these are unrealized transactions.
Okay.
In their mind, it's like as if they're in the fairyland. They haven't taken place yet in the real world.
Okay, so that sounds like good news. So someone who is a trader and who has maybe mined, or they have an airdrop, or they converted, they bought a meme coin and then it went up and then converted it back to stable coin, they're not subject to tax yet.
If we're talking about the company, an investment firm, then possibly these transactions need to be declared in the financial statements, but they won't be taxed because they're unrealized gains or losses. Okay?
So the next question is, someone who's been trading and they have accumulated a portfolio, and at some point they want to do the right thing and they want to buy a house, but they want to declare these profits. They'll probably go through a tax ruling, I'm guessing, but do they need to prepare paperwork to show all of these transactions?
This is a common question and practice actually. We have some clients who are buying houses, building blocks of houses, and what they have to do is, of course, to provide us with evidence of their annual spending. So maybe every month they were withdrawing tens of thousands or few thousands. So we as accountants, we need to calculate their annual spending, okay? And based on that spending, we need to declare it in their personal tax return at the year end. We're talking about individuals now.
Yes.
So this is how we are doing it at present.
But what I mean is that don't they need to explain how they earned all of this money that now they converted it to euro maybe and they bought a house? Don't they need to explain where this money came from? It came from crypto trading.
The practice is that they will explain to us privately, okay, how much money they have taken out from the crypto space. Based on that amount, we will submit their tax return and they will get taxed. If the income tax office has questions, and that could be, those questions could arrive after a couple of years, okay? Then yes, we will need to provide them with our workings, and depending on each case, they could dig further and further. So it's not instant. I mean, everyone in this room could be declaring everything, and maybe there won't be not even a question from the Cyprus Income Tax Office. Right. It's up to their discretion to pick up a tax return and decide we will do an investigation or not.
So let me just repeat that. So the taxpayer would share their details with the accountant, but the accountant will not share these details with the tax authorities unless the tax authority asks for explanation. Okay. Yeah, I think these were the topics I had in mind. Before we go to the audience, is there any other topics you want to raise?
Something important is what you said. If we have individuals who are trading or mining or exchanging, in the Cyprus income tax law, if they want to declare everything on their tax returns, even if they are unrealized, they could, okay? And their tax return would be as a sole trader. So we need to provide information as a sole trader that they are doing that as a living, okay? So these unrealized gains or losses from mining or everything, we could input them in their personal tax returns, but there won't be any taxation on them. And this is hardly the case, and we haven't come across such clients yet because most of our clients, they use the companies to do that for the reasons I've mentioned earlier on.
Do you have any information to share about CRS, the Common Reporting Standard, where let's say you have a bank account with Revolut and they are required by law to inform Cyprus once a year how much money you have. Cyprus, the tax authorities, if they wanted to, they could ask for the individual transactions if they investigate you. Do you want to talk more about this?
I think we're talking about the MiCA regulation.
CRS, Common Reporting
Common
Standard.
reporting, but the MiCA covers that as well. This will be the future. So in few years' time, you won't be able to use any exchange without being onboarded properly and without having that exchange having to apply the CRS and the MiCA regulations. So basically, the industry is consolidating, like with the investment firms, everything will be reportable, even cryptos. So now the second part of your question is, of course, what happens, assuming we are now in the era where everything is being reported, what happens and how frequent are these investigations by the Cyprus Income Tax Office? I would doubt it that the Income Tax Office of Cyprus will be geared up or equipped to do so many checks. We've seen it with the CRS, with the international clients. Of course, CRS applies for passive deposits. We're not talking about cryptos, we're talking about normal corporates. And I'm not aware of, I don't even know one single case that something like that took place, neither from colleagues, neither within our portfolio. So yes, but they are dealing with big players, the EU, Cyprus, and all local tax departments. They don't have an army of inspectors or officers to be dealing with investigations. So we're talking about the very big players, and maybe that's why we are not aware of them.
Okay. So before we go into Q&A, anything else, Kyriakos, you want to raise? Any other topics?
We have covered this space of cryptos extensively on our YouTube channel, Cyprus Tax and Relocation. We have also a new podcast, which is called FinHub Cyprus Podcast, Financial Hub, where we have a whole episode with detailed questions and answers. This episode, I think, will be aired this week or next. So feel free to send me, DM me on Facebook or whatever, and I will address you to find more material about this. We are now at the stage where we're confident, all of us, I mean yourselves as well, ourselves as tax advisors, and the Cyprus Income Tax Office, how everything is taxed. There is no ambiguity. And even Dubai, let's talk a bit about Dubai and the UAE. As you know, Dubai and the UAE is a progressive jurisdiction. Every few months, things change there. They're becoming stricter, better, and more advanced. A few years ago, they were very friendly with cryptocurrencies, and now, slowly, they are also taking the approach that if you're dealing with cryptos and it's considered trading activity, it could be subject to tax. So even there, Even though some banks accept cryptos there and it's okay, you could be subject to corporate tax. And this is very important because everyone thinks, everything is tax-free there. Individual salaries, if you are receiving passive income from a flat, or if you are an employee, or if you provide a service every now and then, maybe it could be considered, most likely it will be tax-free in Dubai. However, if you hold many properties, for instance, and you're doing this as a living, or if you're trading all the time cryptos, then you could fall under the trader there as well. So that's what I mean, that everything is slowly narrowing, and cryptos will be taxed. So in our professional opinion, what we advise our clients always, and that's why we have so many clients, corporate clients as well, is to set up the Cyprus company. The corporation tax is very low. Most of the big players are usually internationals who relocate to Cyprus, so they are also non-domiciled. So effectively they can chill, relax, pay only 12.5%, and of course have the EU safety of their money and their rights, because don't forget, Cyprus is a full EU member, so the EU law applies, which is contrary to other non-EU jurisdictions. And this is important to know, because there are cases where people lose their money and they cannot find their rights. They cannot fight, not even fight. Once a decision is taken, you cannot complain anywhere, the story ends there. So this is my take.
All right, so we'll go into Q&A, and we only have one microphone for Kyriakos, so I'll ask you to shout. So, you want to go first?
Good evening.
Hi.
I wonder what about those who are long-time holders?
Very good question. This is a common tax ruling we used to get, because now it's clear for our clients, is what I've mentioned at the beginning. You are a whole-term holder, but are you a sophisticated trader, even though you have not converted it? And what does it mean, a sophisticated trader? If you have inherited, for instance, 5 Bitcoins from your family, from a friend, and you've never touched them, and you haven't done anything with them, and you've decided after a few years to sell them, and that's it, then there is a possibility that that transaction will be tax-free, okay? However, if you have inherited, let's say 5 Bitcoins or 10 Bitcoins, and then slowly you got into the space and you're buying and you're a member of several exchanges, and you transact, the income tax office will consider you a trader and will tax you on all profits. So this is a very good question. You require a tax ruling to be certain of the outcome, and in that tax ruling you need to put the right facts, because when the time comes, the examiners will need to see, maybe they will ask you for your credentials to the exchanges and see whether you are logging in, logging out, how often you use them, to understand how sophisticated you are. It's very rare to dispose them and not get taxed. This is what you need to take from this, unless, in some cases, guys, have not been examined, okay? I mean, now people are declaring their profits because they want to buy properties, cars, and what have you. So even with the right tax planning, you need a tax ruling to make sure that you will not be surprised. No. Hi.
First of all, I just wanted to thank you both for coming.
Thank you.
Second time, and Dimitri for hosting these regular meetups. I'm going to ask you my question, which is the most popular question I get. Most of the people in Cyprus use Revolut as an EMI, and they don't use their local banks, since it's very hard to on-ramp or off-ramp crypto in Cyprus. And the question I get the most is that even if they are strictly legal and they submit all the financial reports, excluding Revolut as an EMI, where they usually off-ramp any of the trades or realize the financial assets that they have. Would that appear anywhere, and are they liable for not including these in the financial reports?
Of course.
And when I say EMIs, I know Revolut most recently kind of changed its status, but generalizing EMIs like WISE or other, strictly speaking, EMIs that are not banks, that are crypto friendly.
All these EMIs are now going to be captured by the MiCA regulation, and of course they should be declaring everything. So is what I've said earlier on, when you are transacting and you're converting to real money, real assets, strictly speaking, you need to be declaring it. So Revolut, of course, has the function, and there are many other EMIs and tools to calculate automatically your profits as well and what you should be declaring in your tax returns. So we have many clients who use different tools to declare their profits. So the answer is yes, they should be doing it. They are getting away with it until the music stops. That's always the case with everything. When there is something new, the regulation tries to catch up. The first guys they are the ones who get away with it. You know, it comes into waves. And when the market matures, the regulators know how to capture everyone and they do it. It's not rocket science, and this is very important for everyone to understand. And I've mentioned it earlier on. Everything, especially cryptos, there is an audit trail. You know it way better than me, better than anyone. It's a matter of whether someone will sit and spend their time to figure out whether you're cheating or not. Whether they have the resources in any jurisdiction to sit and do the investigation.
So last year or a few months ago, the president talked about the upcoming changes to the tax law, but there was no mention of crypto, and this topic is not in the agenda at all in Cyprus, right? The topic of taxation of crypto.
To be honest, I'm not surprised, because with the current approach, it suits everyone, but the Cypriots. So it suits the internationals because they are not domiciled. So they put everything into a company and they only pay 12.5%. So what's the point of changing anything? It's very low, 12.5%. For us, unfortunately, the Cypriots who are domiciled here, it means we need to pay the special defense tax. But very good question, Dimitris. If the special defense tax gets reduced to 5%, then your overall corporate tax will be 17% or even less if there is a deemed dividend. So again, everything will be legal. You'll be paying only 20% or 15 or 14% on your profits. You cash everything to the bank. It's fine, I think. You know, when you talk about less than 12% or less than 10%, it doesn't work because you're considered a tax haven. And when you're a tax haven, you have other kind of issues. You have banking issues. Nobody wants to trade with you. So it's unlikely that something like that will take place. But I think even the Cypriots now, if the dividend tax becomes 5%, and if the deemed dividend, which you are taxed 2 years, we're talking about companies now, okay? Companies, after 2 years, you will be taxed 5% on the 70%. You also get a discount there. So 12.5 plus something less than 5%, we're talking about more or less 15 or 16% altogether. That's sweet. So the internationals will be paying 12.5, the Cypriots 15 or 16%. That's fine. Or at worst, 17.5% or whatever. It's below 20%, which is fine, I think.
Naso?
In regards to this, I have one question.
Yes.
Okay.
In the legislation they suggested, they have also a clause for crypto, specifically crypto.
Okay.
They say that they will tax them at around 10%, I think, if I remember well. And they don't explain that if you have to pay also the tax for the company or the individual separately of this 10%, let's say. And they also say there that even the realized profits, for example, converting from crypto to crypto, will be also taxed. And
Realized. Unrealized or realized?
realized, but
Realized.
cash it,
Yes, realized. That's fine. Yes.
Yeah, so.
I'm not aware of that because I haven't seen the
So
legislation.
Audit and the Office of the Accountants,
They put it, okay, has this gone to the parliament though?
It's one of the
The
suggestions.
suggestions, yes,
Yeah,
yes,
it's not over.
yes.
I mean, they have to.
Yes.
My question is if this will be applied on top of the other taxes?
No, no. Yeah. If that passes, it's a big, it could pass, it's not up to us. I mean, we've pushed for certain things so that they will pass, especially not to scare the international people who come and relocate here. So we don't want to, for instance, we don't want us to pay less dividend tax and having them paying more corporate tax. We want to keep the corporate tax as low as possible. And we,
Because if they do this and we don't have to pay other tax, for example, personal income tax on the crypto,
yes,
so just 10%.
it will be, I think if that passes, that's how it will work. Because you guys are sophisticated, you are dealing with cryptos every day, you log into exchanges, some of you do mining, lots of things. Understand that the examiner at the income tax office is possibly 55 years old or whatever. They are not so high tech. It's very hard to find people to dig and understand all this. So I would not be surprised if that's the case, but I don't know if that's part of the legislation that went for voting. Hello. I remember you from the last meetup.
That's good.
Have a good memory.
So, it was a question about long-time holder.
Yes.
What happens in the possibility that you inherited some Bitcoin, let's say 5 Bitcoin on a ledger or something, but at the same time you are a trader?
That's what I've said earlier on.
Yeah, but you can show the transaction and everything. It's all of them.
If this was a tax advice, I would tell you if you have inherited your cryptos individually from someone, you don't do any trades individually. You create a company, which is a different vehicle. You put money into the company and you trade with the company. And even that, you need to get a tax ruling to make sure that the income tax office is not going to do any monkey business and is going to consider that your initial inheritance is tax-free. I think that's difficult though, because you are a trader, so you cannot even fool them with that.
It's unfair at the same time.
Life is unfair. Basically, we haven't seen this in any, the income tax office avoids to put this in writing, okay? But this is a consensus. But we haven't seen this tested. So I don't have a tangible case to tell you, we've done this group structure, we said no tax, it was examined by the income tax office and they have agreed to no tax. But for instance, if you have inherited something, the best advice is don't touch any other cryptos, maybe have others, whatever, dealing with you, and get a tax ruling and catch them once, and maybe if you have the tax ruling which says if you're not a trader, if you're not dealing with anything, and you catch them once, then it will be tax-free. But again, you need to see this in writing. Because now we're having the meetup, maybe the laws will be voted whenever they are voted, maybe this changes. Whatever we say, it could be subject to change. That's why you need something in writing, especially when we're talking about a lot of money, which in our cases, usually we are tax-wise and profit-wise. Yes.
You have profit from NFTs.
Yes.
Is that a tax event? And I think NFTs, they are not regulated by MICA or not.
They are not, I think, regulated. But again, as far as the income tax office is concerned, because there isn't yet a specific crypto regulation, they stick to the principle tangible, realized and unrealized. So if you have profits which are unrealized, you will not be taxed.
Yeah, but if you realize from NFT,
You will be taxed. That's for sure. That's a general law. I mean, yes.
So if I pay you with Bitcoin,
Yes.
who pays the tax?
You made a sale. You made the sale?
I made.
No, you paid me.
Yes, but you received the Bitcoin.
Yes. I received the Bitcoin, I've raised you an invoice, so I'm going to pay tax on my invoice. Whether you paid me or not is irrelevant. Now, on the other side, for you to pay me, if you paid me 5,000 euros, it's as if you received 5,000 euros from someone. If you made 19,500 payments, let's say, which is a tax-free amount in Cyprus, you get my point. This will not be taxable because it's tax-free anyway as a salary. Say you paid me 5,000 and you paid someone else 14,500 in a year, in a calendar year. Yes? It's as if you received that money to pay me. Because I'm not getting paid, how I'm getting paid, how I'm getting taxed is by invoices.
So
Even if you give me a car or a goat or cryptos, it's irrelevant. I will pay my tax based on my sales invoices.
So let's actually
Yes.
let's.
You will show the sale of Bitcoin because you will sell the Bitcoin to get euros, correct? As a business.
You don't know. Maybe I have an exchange and I don't do that.
Let's actually break this into two parts.
Yes.
Right? So you're receiving Bitcoin and you're offering a service or you're selling
Yes.
something. So there's two topics here. One is that
Maybe there are three topics. 1, 2, 3. Yes.
So one is that you're invoicing, so you'll have to pay tax on the invoice.
Yes.
Doesn't matter how you got paid, but he's disposing of Bitcoin. So is he realizing
Yes.
profits?
Yes.
So he's getting a car, a house, or something.
It's the same.
So he should declare
Those 5,000, for instance.
or whatever profit it was.
And the next extension to that is I've received, let's say I have received 5,000 now in Bitcoin. Okay, let's say that's the value. If that increases in value and I haven't sold it, I'm not going to pay any tax on it. On the Bitcoin you've given me or on the coin you've given me. I will pay tax if I convert it into fiat to pay my employees, for instance.
Okay.
Yeah. So the people who are paying someone or who are exchange is as if the value that they are paying or the value they exchange something is the equivalent of a salary. Okay? But without the social securities. It's as if you received from someone those 5,000 and you need to declare them.
Okay.
Yes.
Can you please explain more only about the process of the tax ruling costs, what documents you may need?
For what?
Tax ruling.
For tax ruling?
Yes.
Okay. We're talking about an entity, a company or an individual, a private. You need to say who you are, your tax ID, and you need to explain what you do for a living, okay? Up to which year your tax returns are being submitted, and of course you need to describe your trading activities. So we're going to say I'm an individual who is currently dealing with mining. I've been mining for the last 5 years. I have accumulated these coins. Today they are worth that much. I'm considering buying a house. Am I correct to say that I need to declare in my tax returns this amount because of that, and you're going to get a specific answer. So basically you need to sit with your tax advisor. He needs to write a report, it's 2 or 3 pages. You need to pay 2,000 for the expedite process, which is disbursement to the income tax office if you want the answer within a month or a bit later, or 1,000 euros if you want the answer within 3 months or 3.5 months. And of course you need to pay your tax advisor who will prepare the report. But once you get this report, it's binding on your circumstances. So if you describe something wrongly and you're doing something else, and you trick the system, if you are checked, it won't, the fact that you have something in writing won't save you. Because you've described something, you've described A, why is you're doing B? So the answer is based on the A, the facts of the scenario A, not of the real transaction B. Yes.
You have a son.
A what?
If I have a son and I want to send him Bitcoin as a gift,
It's a very good, you need to get it in writing, and I would expect this not to be taxed. But we need it. Yes, yes, yes. But again, with the knowledge that we have now, this is my understanding. But you need to get it in writing. Yes? Yes.
How is it possible that inheritance is investigated when the way I see it is if I investigate the blockchain and I see a series of transactions, if I declare that this is my wallet, every transaction on it may appear as trading. So technically the only inheritance is mining and never touching it. It sounds a bit silly to say that this is my money, I'm giving it to my son, he is not a trader, when the anonymity of the blockchain means that all 100 transactions are immediately negated because I suddenly say that this last transaction is the inheritance. Surely this is not provable and it sounds a bit...
Mining is something very sophisticated and it's taxable. Now, if it could be the case that you can convince the income tax office that your son is not a trader, he has never touched anything. It could be the case that your son is not involved in cryptos and you died and you left him this amount and your son can prove this.
I know, it sounds a bit silly. That means that all of the traders can make one more transaction, call it inheritance, and declare it. It just sounds improbable that this is a scenario.
Based on what we know, this is the understanding that we have. It hasn't been tested and I haven't seen it tangibly. I've mentioned this earlier on. This is a general consensus that we professionals understand, but we don't have a case that this happened to tell you for a fact. But if you were a trader of all of your life, okay, it's unfair for your son, for instance. Why should your son, who would inherit a house, not pay tax on it? And if he has inherited 5 bitcoins, he hasn't touched them, and he sold them at 20 years old to be taxed from value 0. You know, it's a bit unfair.
I agree, but the fact of the matter is all transactions leading to the last wallet that is going to realize them technically would be under one owner or...
It has to change, yes, it has to change owner. We're talking about inheritance means you cease to have any legal rights on the value or on the asset that you own. So you need to remove yourself from the portfolio and put your son, for instance. It's a good test, man. I really want to see it in writing myself. I mean, I'm waiting for a client to come to do this and get the positive answer, so I'm also happy. But you know, no one comes forward with these kind of questions. Formally, I mean, yes.
Let's complicate it even more.
Yes.
I'm sure there is no ruling or a law for this, so I just want your opinion.
Yes.
So I bought 100 bitcoins 10 years ago.
Yes.
Yeah. It raised in value. I'm not selling it. I'm loaning against it.
You are loaning them?
I'm mortgaging them.
Okay.
I get out the loan in euros. Yeah. So basically, I get from the appreciation of the price. Yeah. And at the 120K, I get a loan.
Yes.
In the whole of the financial industry, at least I know that loans are untaxable, correct?
Yes.
So what happens here? What's your opinion that what should happen here? Or what the regulators might think about it?
You need to think about it.
Because I'm not selling, yeah?
Yeah, you need to think about it. I think if you were giving your property to get out the loan and your property was increasing in value, would you be paying tax on your property?
What do you mean? I'm putting 100 bitcoins.
Yeah, instead of bitcoins, let's say you put your flat, you bought a flat from the paper today and you got a loan.
Yeah.
And 5 years down the line, this flat worth 30% more than the initial. Would you pay corporate tax on the appreciation of the
It's
value?
not realized.
I wouldn't expect to be taxed in your case because the same application applies. Because there's no specific tax law for cryptos. It follows the general
So
law.
it comes to the fact that we need the definitions to You said in stock. What is Bitcoin? Is it an asset? Is it a stock? Is it?
No, it's clear. That is clear. That is clear. A Bitcoin. Okay, that's another good question. Bitcoins, coins, or whatever, they are treated as commodities in terms of the tax law, not securities.
When you say Bitcoin or whatever, is it Bitcoin or is it
Everything.
everything? Okay, we need to.
Coins. Yeah. So,
Bitcoin is, in my opinion,
okay. I'm talking about the income tax office. The income tax office treats it as a commodity. That's why we have clients who are trading currencies and coins. The tax is the same. If the same company though trades in securities, which is what you said, securities are titles, shares, those have a specific taxation. They're tax free, they're outside the scope. So,
if you trade stocks,
yes.
if I buy a stock today and I sell it in 3 years, then taxable even.
Correct. Because the Cyprus Income Tax Office has classified it as untaxable, outside their scope for taxation.
So it's not the same.
It's not the same. Bitcoin, Ethereum, or whatever, all the coins that you know, they're treated as commodities, like currency. If you're trading currency, you're paying taxes.
Let's repeat the question that Nasos asked. And it's a common scenario that many people with crypto are thinking about, which is that they will get a loan against their crypto, and then they'll spend this money.
Yes.
And the answer is that that's not taxable. Receiving this loan, even if your Bitcoin continues to increase in value.
It would be, to be 1,000% certain, you need to have a tax ruling for this. But my understanding is that you have not realized your portfolio. The fact that you got a loan, in practice, when you get a loan, there is a mortgage on your flat, let's say. In Bitcoins, have you surrendered your rights to the loaner? If you have surrendered your rights, it's as if you have.
It's the same as a bank.
It's the same as a bank.
Surrendering it to a MICA license entity to act as an escrow or whatever you want to call it.
That's a very good question. I cannot be certain on the answer. I haven't seen this.
Because I believe this is the way.
It's the way as long as it's tax free.
If they start taxing unrealized gains.
I know, but maybe the income tax office will take the view that you have surrendered your portfolio, and by surrendering, it's as if you dispose it, but it's wrong because you haven't disposed it. It's the same like a flat. And because the same principle applies, I would not expect to see taxation. I think it's non-taxable activity, but I'm not certain because I haven't seen it in writing. It hasn't been tested from our clients. We don't have a tax ruling. Yes.
On the same topic, if you buy Bitcoin through a stockbroker, like an ETF from like Robinhood or someone else, then it's treated like a security. So that's one way to sell Bitcoin without paying taxes.
It's treated as a security.
If you buy an ETF or an ETP, basically from a stockbroker.
You buy it as an ETF.
Yes, if you buy it like that, it says again, no. We have a tax ruling for that. If it's the same with the hedge funds and the big investment firms, the income tax office says, because you could buy a bundle of products, okay, and call them as the way you want to call them. It specifically says if the underlying assets are cryptos, they will be taxed as cryptos. If the underlying assets are securities, they will be exempt from corporate tax.
So even though you're buying a stock from a stockbroker, it's
Yes, bravo. It's a very good question. Even if you buy a package, no matter how the brokers name it, what is included in the box? If it's cryptos, strictly speaking, it will be following the rules we've talked about today. It's a very good question, huh?
So let's follow this up with treasury companies and MicroStrategy. So apart from the ETFs, where it's actually very clear what the underlying asset is, we now have many companies, and this started with a company called MicroStrategy, that they buy Bitcoin for their treasury. The company itself does something else. The company does enterprise software, but they have enormous amounts, billions and billions of dollars in their treasury in Bitcoin. So essentially, the stock price kind of is heavily influenced by Bitcoin. So this would be a company stock, right?
Explain again what we are buying from them.
We're buying the stock of a company. It's a listed company.
Ah, that's different. So if you own part of the company, you own the shares of a company who is dealing in cryptos, you are holding securities.
Yes.
And it's tax-free if you sell them. It's different. Now, if you're buying an ETF or any package, or no matter what they call it, that the products themselves include cryptos or currency or bonds, they will be taxed accordingly.
Okay.
Okay?
Change of topic a bit. You talked before about the cards from exchanges.
Yes.
Let's say you deposit every month from salary. You get tax on your salary.
If the amount that you deposit is the same the amount that you withdraw, there is no tax implication.
But if let's say I buy Bitcoin every month with every cent of the salary and I spend it, but it increases in price, let's say in 1 year's time, and it's 50% higher, how do I get taxed? I still pay with the card, but the value.
Give me a specific example. Let's say you earn every month 2,000.
Yes.
Let's say you earn 2,000 euros, okay, and you put them into the exchange,
Yes.
and you buy a coin.
I buy Bitcoin. And
Yes.
I spend it. I live my everyday life with the exchange's card.
A debit card.
Yes.
Okay, at the year end, okay, you need to go to your accountant, and you need to prove to him that every month you are spending 2,000 only to sustain yourself with the card.
Even though it has.
Yeah, it's irrelevant. The value that goes up is irrelevant. It's not realized.
But if I sell it,
That's when it comes relevant, yes. So every month, let's say you deposit 2,000, okay, and you withdraw 2,000. So, and you don't withdraw anything else, you and your wife or you alone as an individual. We're going to put in the tax return that your income is as your employer, let's say, and we're going to see how much you spend together. And if you spend as much as your net income, it means you are not taking advantage of the unrealized profits. Okay? But if you buy a car in a year, which is 50,000, let's say, and you barely manage with 2,000 to go by the month, those 50,000 will be added to the, let's say, 24,000 gross salary. So you're going to put 74,000 gross salary, yes? So you owe to pay tax on that 50,000. Bravo, income tax with no social securities.
You need to ask questions because we're waiting for the pizza.
Yes.
What happens with cash backs from exchange? If you pay with euro, and you get in cash back, for example, with crypto.com card, what happens with that?
Look, whatever the scenario is, it boils down to the fundamentals. If you put 100 and you get out the equivalent of the 100 that you deposited, it's not taxable.
Or maybe you are stuck in CRO for 3 years. You are selling after 3 years. So you will pay the tax after 3 years.
Bravo, yes, yes.
Yeah, and if they are asking where you buy that, I pay with the card.
That's a very good thing because the exchanges do not keep historical information, and this is a problem we have now when we are preparing tax returns. Huh? But not for many years. And now, maybe now some, not all. Okay, you need to, make sure that you have all the trail. Because a few years ago, our clients couldn't produce the audit trail because the exchanges could go back up to 5 years. It changed now. Okay, it is important because if you cannot prove that you have downloaded it or take screenshots with your credentials and everything, an Excel sheet or a PDF, anyone can falsify it. They could say, I do not accept it.
So actually, let's repeat this point. It's important to prepare for a future event.
Bravo.
And you should be keeping records, exporting your history from exchanges. You should be saving all of these emails, print screens. Even though you don't plan to sell any, you should do this record keeping. And